All right, my name is Oyekomi Philip. I am I am reaching out to you from Lagos. I and my team we are welcoming you all to the boot camp, our first boot camp, which promises to be awesome. And we plan on dropping the whole value to you without holding back on anything. So the call is going to be in this manner. Let me start with the call, the way the manner of the call is going to be. Oh, okay. Let me start with welcoming you guys and telling you who we are. Welcome, we are RBTM 301. That is our ID. Okay, let me show my screen back. Right. Can you guys see my screen? All right. So RBTM 301 has a meaning, but I don't think we would like to get into the meaning today. We trade the financial markets. We don't call ourselves Forex trader, we actually call ourselves traders because the financial market is full of different, let me say, commodity stocks and all. So saying we are Forex trader is going to be limiting us to just currency pairs such as Euro USD, GBP USD, GBP AUD, that's the Great Britain pound versus the Australian dollar. If we say we are forex trader, we'll be limiting ourselves to those pairs. But we are traders because we trade literally everything. Anything that has a chart, anything that has a candle, we trade it, be it Bitcoin, which is the crypto space, be it the indices, NASDAQ, which is stock assets, which be it Tesla, Twitter, Metaverse, because we don't have Facebook anymore. We have Metaverse, gold, silver, US oil. We trade everything. Literally, we trade everything. As long as it has a chart, we trade it. As long as it has a chart, we trade it. So we are traders, and our plan is to make traders out of you as well. We are interconnected. We try to make sure that we carry everybody along. We try to make sure we carry everybody along. So, welcome to the bootcamp, right? That's who we are. And now I would like to also tell you the scope of the meeting. So this is how we planned the meeting. Like I dropped on the call on the Telegram platform. It is going to be I have drawn out the scheme of work, or we have drawn out the scheme of work, and we are going to be covering that. The only problem I and my team we've been trying to wrap our head around is it is a 5-day boot camp, and because we planned that we are not going to be holding back, I don't know how convenient it's going to be for you guys, but we have decided that anywhere we stop any day, we are going to continue from there. We are going to pick up from there the following day. So we don't know if we are going to use the whole 5 days to finish the whole scheme. If we can't, then we are going to continue if you are comfortable with it and convenient with it. We're just going to continue, let's say next week. We are going to continue. We are not holding back anything. That's the first thing. All calls is going to be recorded. We're recording every single call, like this one currently is recording. So, and the idea is once the call is recorded and then the upload is going to be set on YouTube, so you could easily access our YouTube page, and then you could download or rewatch it on our YouTube space. All right. I haven't said that already. So we have different educators that are going to be teaching, and one thing about my educators is every single person has experience. So you can trust their skill, expertise. You can trust their experience. They do not just have experience in trading forex or trading the chart. They have experience trading the right way. After the old drama, but I believe you understand what I'm trying to say. So every single person has experience. They are vetted. They are trusted. They know what they are doing. So they are not just here to just waste your time or no, none of that. Having said that as well, like I dropped in the call in the Telegram link, no educator as well is going to private chat you for investment or anything or asking you for money or any of those things. No educator is going to do that. No educator is going to do that. The Zoom link, the bootcamp is free of charge, all paid for. Every single resource that we are using, everything is free of charge. So nobody is going to ask you for investment that we will double your money for you or we give you a particular percentage. We don't do that. We just train. We just train people, all right? So don't fall victim for any. In fact, while we're preparing for the boot camp, like I think the second day we already saw a scam group and we had to pull it down. So we are not going to do that. We are not going to do that. So having said all of that, tonight, in a few minutes, the first educator is going to be coming up. But like I said, I'm going to tell you how the meeting is going to run. So we're going to be starting by 9 p.m. rather, every day, 9 p.m. West African time, 9 p.m. every single day till the bootcamp finishes. And we are going to be running psychology call for 15 minutes every single day. And I'll be here to take you on the psychology call. Normally, I'm meant to do the psychology call today, but because it is the first day and I would like to welcome you all into the boot camp, that's the reason why psychology may not take so much time. So you're welcome. Today, you're going to be training on what is Forex. Of course, so much source is going to be dropped today. But let me leave all of that and then go straight to our psychology. Now, the reason why we have decided to put on the psychology is because we over time, like I said initially, that we have experience in trading the charts. We've discovered that so many people have made a huge loss. I've made huge losses in Forex, no doubt about that. No doubt about that. If you are a Forex trader and you don't want to make loss, then well, good news, my first educator is ready. So I'm going to be passing it on to him in the next 10 minutes. So, like I said, we discovered that a lot of people have made so many losses in the Forex market. And this is sometimes probably not necessarily because they don't know how to trade, or probably maybe because in a charismatic way, we used to say probably maybe they are following you from a village. Of course not. It's because so many people have wrong psychology or wrong perspective or wrong mindset towards the market. And this has been something that we have been trying to deal with in the past few months with the team. So that's the reason why the psychology call is very important. So I know most of you want to teach me this thing. How do you enter the market? And you are agitated for all of that. Just calm down. Be relaxed. Just be relaxed. You know, what is worth doing is worth doing well. And trading is a marathon, not a sprint. So anything you are doing, you have to, if you are preparing to do a thing, one needs to prepare to last. We are not here for 1 year. We are not here for 2 years. It is something most we have decided to give all our all to. So if you have a wrong psychology or perception towards the market, then maybe that's the reason why you're even failing in the first place. You know, there are some people that they force their decision on the market. So you click a buy button and then the market is telling you to sell, but because you feel you want it to buy, this guy must buy, go up. And the market is telling you, oh, come on, guy, I want to sell, I want to go down. And at the end of the day, they keep on modifying their stop loss, saying it will go up, it will go up, it will go up. In fact, I didn't have so much time to bring up a whole lot of things. There was something that was shown, one of these guys that wanted the market to go up, and he kept on loading the buys, about 30 entries, waiting for the thing to buy, and it kept on going down, and then he drew an arrow that is going to go up anytime soon. That's the surest way for you to do your account if you don't know what the market is doing and you are trying to force your decision on the market. So one of the very things I want you to leave with today on the psychological is you cannot force your decision on the market. Don't decide for the market what you want the market to do. So let me start with that. We don't decide for the market what the market wants to do. There is a reason why these candles are printing. There is a reason why they will go up, and there is a reason why they will go down. There are people that move the markets. There are big boys and big guys that move this market. So if you don't know how to position yourself alongside them, then you should not even be trading in the first place. Trying to say, okay, there's something I'm seeing here. I think after this candle has printed, then this thing should start going up, or after this candle has printed, this thing should start going down. No, we don't force our decisions on the market. There are certain things we look at that gives us confluence for us to take any trade at all. So like I said, the first thing I really want anybody to leave here with on this psychological is do not force your decisions on the market, be it whatever strategy you're trading, be it ICT, be it pattern trading, be it harmonics, be it smart money, be it wave, Elliott wave. Do not decide for the market what you want the market to do. Let the strategy present itself and then position yourself to be a part of that move, all right? So having said all of that, I'd like to welcome my first educator today. We generally call him Baby Boy, but his name is Dominion. Dominion, are you with me? Okay.
Yeah, sure. Can you hear me?
Yeah, I can hear you. So I'm making you the host now. So you are the host now, Dominion. And guys, please make sure you take a whole lot of value from Dominion. His nick is Baby Boy. We call him Baby Boy. He goes by many nicknames, but we like to call him Baby Boy. So Baby Boy, over to you.
Thanks. Okay, let me share my screen. Hey guys, can you see my screen?
Yes, I can see it.
All right, okay. I officially want to welcome all of you. I can see from the call we have different kinds of people on this call in terms of their experience and exposure to Forex. I know I can see some familiar names here, and I can see some names that I don't recognize at all. So I want to believe we have newbies on this call. We also have some experienced people on this call. Maybe you've been in the market for a while. You're finding it hard to regain consistency. Hopefully this boot camp will fill in the gaps in your understanding. And then the newbies, hopefully if you stay long enough in this boot camp, the knowledge that you get from this boot camp is going to propel you in your journey of Forex. If you take everything we are saying here serious, you'll be miles ahead of so many people in this industry. So get your writing materials, your notepads, and let's dive in. All right. Okay, we'll go there. Okay, I'm sure you guys will agree with me that Forex has a bad rep in this country. Not only in this country, but other countries as well. When you tell people that you're doing Forex, what's the first impression they have about you? Have you ever introduced what you do to somebody and what was the reaction you got? If you have some funny experiences, you can just drop it in the comment section if you like. But most people will just look at you like, oh, this is another fraudster. This is a Ponzi scheme. Some people will just believe that it's not a legitimate way of making money. And then in this country where If anybody sees something like chats on your phone, maybe the police or any government official, if he sees all these chats on your phone, he assumes that you're doing internet fraud or something. So how do you explain yourself to these people? You can't just tell them that you do Forex. Forex is a vague word. They might not understand what is Forex. So how are you going to explain to these people? So that's what I'll be taking you through today. Okay, so let's dive in. So this is my outline. I'll be telling you what foreign exchange is. I'll tell you what Forex market is, what can be traded in the Forex market, and who can participate in the Forex market. Oh, I can see in the chat, all of you are saying, people think you're a fraudster, you're doing your exactly, and nobody's going to understand. So I'm going to explain it in a way that everybody will be able to understand. At least the average uneducated, uninformed Nigerian will understand what foreign exchange is. Okay, I have on my screen here that Forex is the transaction of changing one currency into another currency. This process can be performed for a variety of reasons, including commercial reasons, tourism, and also to enable international trade. Okay, let me just paint a picture for you guys here. Okay, I'm sure the vast majority of people, they are not even involved. They've not even engaged in anything like foreign exchange before until it's time to go for vacation or you want to buy something online and you have to pay in dollars or pounds. That's the only time that you think of exchanging that currency. So now let's say you live in South Africa. You live in South Africa and you're done for the year. You want to go on vacation to the US. So now you want to spend $1,000 in your vacation, because obviously you can't carry your South African rands to America. Nobody's going to take it from me. Who is writing on my screen? Please stop writing on my screen. How do I erase this thing? Yo, how do I disable annotation? Okay, we're good. So as I was saying now, as a South African trying to go to America for vacation or some stuff, you have to exchange your South African rands into American dollars so you can be able to spend your money. And how do you do that? You go to a place where they call the currency exchange booth in the airport. Okay, there's a picture here. This is how a typical currency exchange booth looks like. You go there, you submit your currency, and then you exchange it for the one you want. As I was saying, let's say you exchange 17,000 rands for $1,000. I'm just assuming that the exchange rate is 17 rands to $1. I'm not saying this is the current exchange rate, but just for the purpose of the example. Now, let's say you go to South Africa, you made a generous uncle that said to foot all your bills, so you didn't get to spend all your money. Now vacation is over, you decided to change your dollars back into rands since you cannot use dollar in South Africa, so you have to change your money back and you didn't spend it. Now you realize when you're changing your dollars back into rands, your dollar is now worth 18,000 rands. That's like 1,000 rand profit. Anyway, it's not as simple as this, but this is the general concept of foreign exchange. Another example would be maybe a business owner, let's say Apple, for instance. They need parts and materials to make their phones from China. So they have to exchange their currency. I'm assuming the producers of Apple, they are Americans. They have to exchange their currency for the Chinese currency because obviously the sellers of the properties, they prefer to be paid in their own currency. So you'd have to exchange the currency so you can facilitate all these deals. As I said, in reality, this is not how forex traders go about their trading activities. You don't just go to the airports to change currencies. If it was like that, I don't think anybody will be doing forex that way. The main principle that you should get from this is that profits are being made from the fluctuations in the exchange rates. Now, instead of going to the airport to exchange your currencies, we have people called brokers, and they enable you to trade currencies via online exchange offices. Are you following? So I'll briefly run you through the Forex market. The foreign exchange market is a global decentralized market for the trading of currencies. When I say it's a global decentralized market, I mean there's no central location, there's no headquarters. Currencies are being traded in New York, Tokyo, London, everywhere. It's open 24 hours, and the only time the market shuts is during the weekend. Now, I want you to get this right. The market doesn't shut down, but it takes shifts. The working hours in the foreign exchange market is like 8 a.m. to 4 p.m. in different countries. But because of different time zones, as the country is closing their deals for the day, another country is just starting their day. So in that way, the market keeps revolving. It doesn't close except on weekends. So on weekends, the market shuts down. It's the largest and most liquid market. I know you guys have been saying, you have been seeing something like liquidity. You don't understand what it means. When I say something is a liquid market, it means you can easily get buyers and you can easily get sellers. Let's say you own a store now, you're selling apples, but nobody's willing to buy the apples. Then there's no point having the markets because there's no exchange. But in Forex, there's always someone willing to buy what you're selling and sell what you want to buy. Are you with me? So you might be wondering what is traded in the Forex market. Well, the simple answer is currencies or money. Think of it like this, like you are buying shares in a company, or you're buying shares in a country. You're expecting their economy to appreciate and hopefully by that way you make some profit. I know some of you experienced guys might be losing interest at this point. Some of you just want to get to the point where I'll tell you, this is how you know when to buy, this is how you know when to sell. But you have to get your education first. Let's educate you first. So at least when SARS hold you, you can defend yourself that you're not doing fraud. So please be patient, yes. So currencies are traded in pairs. You can't just say you want to buy dollar, you want to buy euros. There has to be an exchange. If you're buying the dollar, what are you exchanging for it? Is it the euro you're exchanging for it? Is it Japanese yen you're exchanging for it? You have to exchange. You can't just say you want to buy. Yeah. So currency symbols are always denoted with 3 letters. That helps to identify the name of the country. For example, you see USD, everybody knows USD is for dollar, JPY for Japanese yen, and AUD for the Australian dollar. Now we have different categories of currency pairs. We have the major currency pairs, we have cross pairs, and we have exotic pairs. Okay, let me talk about the major currencies. These are the most heavily traded currencies, and they represent some of the world's largest economies. If you look at the picture here, you will notice that all these currencies, they have one common currency to them, and that is the dollar, the USD, Euro USD, GBP USD, USD JPY USD. You can see USD in everything. So USD is the reserve currency of the world. So it is always traded by a majority of people. And naturally, they have the most liquidity. Somebody's always willing to buy, somebody's always willing to sell. So there is no scarcity of market. There is no scarcity of somebody that is willing to take your own currency or sell your currency or buy what you want to sell. There's always somebody ready to match your orders. These are the cross pairs. These are pairs that don't involve the dollar. You can see the diagram. We have Euro, GBP. I can't mention them all, but you can just You can take a quick look. You can take a screenshot if you want. Yeah, I'll just leave it here for like 5 seconds before I move to the next one. All right. We also have exotic pairs. You can also take screenshots. We have the USDs are as US dollar and South African rand, US dollar and Swedish. So basically, exotic pairs are pairs that contain currencies from developed countries in combination with currencies from developing countries like the South African economy, that the developing economy, Turkey, all those people. So these are exotic pairs, and naturally they are not heavily traded like that compared to the major pairs. So they have less liquidity than the two previous categories of currency pairs I mentioned. All right, so I'll talk about the players in the Forex market. Okay, we have the commercial banks, we have the central banks, companies, online retail broker dealers, and speculators. All right, so let me talk about the commercial banks. Okay, these people, I don't know if you people know JP Morgan, Chase, Goldman Sachs. The newbies might not be aware of these people, but these are people that comprises of the interbank market. If you guys have heard of interbank market, these are the people that, who is Lance? Stop writing on this screen.
Brother, can you
Okay, as I was saying, we have the commercial banks. This is the core of foreign exchange. Currencies are being exchanged for various purposes. Some of them is to make profit, some of them is just to facilitate investments and other purposes. We also have, okay, before I go to the central banks, let me go to companies. Okay, the company, like the example I made about Apple owners trying to get materials to produce their phone from China. You know, they'll have to exchange the dollar for the Chinese currency. So there's a huge flow of the dollar into China. So what is the basic economic theory that you know? Value follows supply and demand. When people keep demanding for your currency, obviously the value is going to appreciate. And if your currency can easily be gotten, people will not really value it that much. So let's say about 100 million USD is being exchanged with the Chinese currency every week. Obviously, the dollar is going to be in major supply and the valuation of the dollar is going to decrease by a bit. Simultaneously, the Chinese currency is also going to appreciate because there's a demand for it. The Apple owners are changing their currency for the Chinese currency so they can purchase the Chinese materials. So this is how all these people influence the exchange rate. We also have the central banks. The central banks like the Federal Reserve System of the United States. So these people, the way they affect the market is they influence the exchange rates. I mean, the interest rates. They can decide to bump up the interest rates in a bid to control inflation in the country. Okay, for instance, let me paint a picture. Let's say the interest rates in the US is about 20%. This is just a rough valuation. Let's say the interest rate is about 20%. And in Japan, the interest rate is just like 10%. Obviously, investors want to invest their money in dollars because of the interest rates. So they know if they keep the dollar in dollars, they know that over time they're going to make more money than them keeping it in the Japanese currency. We also have businesses. I think business is even the easiest to understand. let's say you have a fast food company in the United States. Company is doing very well, and then because of the profit you are seeing and development you are seeing, you intend to open another branch, an international branch in another country. Let's say you decide to open a branch in Australia. Obviously, you can't spend your dollar in Australia. You have to change it to the Australian dollar. So you're also exchanging huge sums of money to develop or to build a new fast food restaurant in the in Australia, sorry. So let's say 50 million USD is invested into Australia. And by the time you factor in the exchange rate, your 50 million USD is worth 55 million Australian dollars. Okay, are you following? If you are confused, you can write your question. So at the end of this lecture, you can just ask me the things that are confusing and I'll go back to it. So let's say you put 50 million USD investment into Australia, and when you exchange it, you got 55 million Australian dollar. And let's say business is booming, and there are other people that want to buy your business. So let's say they want to buy your business for 75 million USD, they want to take control of your business. Naturally, you'll be making 50% return on investment by selling your business. Your business that was just worth 55 million AED. You're selling it for 75 million Australian dollar. Fine. Let's say you sell it. Now it's time to change it back into your US currency. You now notice that when you change it back, the money you got is still 50 million USD. Now, why? The thing that happened is that the exchange rates have changed. Either the Australian economy has skyrocketed, it has gone up, or the United States economy has declined. So the value of the dollar in relation to the Australian dollar has depreciated. So that 25% return on investment is basically 0% return on investment because of exposure to Forex. This is what we call foreign exchange risk. So in a bid to prevent this situation, all these businessmen, when they take up businesses in another country, they basically purchase sums of the foreign currency in addition. So in case things like this happen, they can mitigate the losses that they've encountered from foreign exchange fluctuations. We also have the online retail broker dealers. Like I said, you can't be going to the airport every time to be exchanging currencies. Nobody has the time to be flying to the airport to exchange currencies. So we have to do it electronically this way. I know Nigerian parents or old people generally, anything electronic, they just believe that it's a way of scamming people or something. But think of it this way, just the same way we did not have bank apps in the app. We had to go to the bank to withdraw money and to send money, but now we have apps. It's the same way we have online retail broker dealers now. So instead of going to exchange currency physically or calling someone that works in a financial exchange desk to help you buy a currency, we have online retail brokers. Example, we have OptaFX, we have so many, we have Forex, we have so many. And there are several advantages. In fact, even for these brokers, will not even be trading in the Forex markets. We owe it to them, this opportunity. So what else did these broker dealers do for us? Number one is leverage. Remember the example I gave in the beginning that you went to the US from South Africa, you changed your money into the US dollar. And then on getting back, you realize that the dollars appreciated, but the difference in the profit you're making is not really substantial, 1,000 Rand. So what are you going to use 1,000 Rand for? Obviously, not much. It's not even a lucrative thing to do, to be changing currencies from country to country just to make 1% profit or 0.1% profit. This is where the brokers come in. I'm sure when you're registering for all these brokers online, you're asked to pick the leverage you want. I will not go too deep into this because the newbies might not really understand. So in essence, what they are doing is they borrow you a part of their funds. And the only thing that's required is for you to drop an initial deposit. That's what they call margin. So let's say leverage is 1 to 50. You are entitled 50-fold of whatever you have in your account. So let's say you have $1,000 in your account. The broker can borrow you $49,000. So you can be able to trade $50,000. So that way you amplify your profits and you also amplify your losses. So that's why leverage is a very important topic. I will not be teaching it today. Somebody else is going to be teaching on risk management. So you can just look out for that class, because without leverage, there's no point trading in the Forex market. Then we also have speculators in the Forex market. These ones, I think we fall into this category. We are not doing it for any form of business. We're just looking to cash in to benefit based on the fluctuations in price. And how do you know which currency to invest in? Well, that is what the next person is going to be teaching. That's what he's going to be teaching on. Things on economic data, political information, technical analysis, and other things that you factor into play. But that's not for me to teach. The next person is going to teach that. So hopefully I've been able to give you a brief introduction about what Forex is. So for the newbies, you cannot avoid this. People will eventually ask you, what are you doing? How are you going to explain to them that you're not doing fraud? So I hope you took notes from this lesson. If you have questions, you can ask questions in case someone decides to challenge you that what you are doing is not biblical, is not legitimate, you end up in jail. Whenever you come across people that are less informed like that, you can always school them and tell them this is what Forex is. Obviously, foreign exchange is a scam. Your uncle is sending you money from abroad. They're also participating in scam because they're giving you foreign currency too. So you can see how shallow the reasoning is. So hopefully with this education, you can enlighten the people, and then hopefully the bad reputation around Forex will be depleted. All right, thank you very much. Coach, I'm done.
All right. Thank you so much. That was thorough. That was clean. That was intense. Wow. If you got some values, can you drop some 8? Please pass me the hosts. Thank you so much. My second educator, are you ready? I believe my second educator is also ready for you guys tonight. Okay, just a minute. I want to disable the annotation because some people were actually interrupting while we're working. So guys, I believe you guys understood what he was trying to share with you guys on how the Forex market works. I think it was some few weeks back I was watching this show, this popular TV show. I don't know how many of you know the TV show Lion's Den. And most of the things that it is been that I picked out of that very show is the fact that if you are doing anything, you need to have thorough understanding of what you are doing. Because in this time and age, a lot of people believe that if you are doing Forex, if you are into Forex, you are a scam. And the idea for me on that is the fact that so people that are doing Burundi change, people that go to the nearby Habuki to give them the dollar and collect naira. Are they also scams? So the idea for me basically is just to make sure that any single person that is in the forex market, you should understand the fact that it is legit. It is legit only if you decide to start doing something that is not legit. So, so before I pass it on to my next host, don't worry. Tonight is basically for all of this. Remember, we start from the basic to the complex. So just persevere. It's not going to last forever. I'd like to do a shout out to my coach, Coach Tony Blair. Thank you, Coach. It's not on the call, but I know he's going to catch up on the recording. Thank you, sir. When is it ending? Okay, tonight's call after the next person is going to be the last person, and we're going to call it tonight. But basically, the call in general or the bootcamp in general is on Friday. So by 10:30, 11, we should be done. But I think 10:30 max we should be done for tonight because it's more of a basic um, introduction to Forex. So I'll be passing it to my next host, to my next educator now. His name is Temi Tokwe. He does not like it when I call him Temi Tokwe. He likes Tokwe. So we call him Pablo. But yeah, trust me, you're going to enjoy. You're going to enjoy. So Tokwe, over to you. Thank you. Thank you for joining us. Thank you. So over to you, Tokwe. You're now the host.
Okay, good evening. Thank you, Coach. Baby boy, thank you for that wonderful presentation. Okay,
Yes,
sharing
sir.
my screen now. Can we all see my screen? Yes, sir. Please drop ones in the chat if you understood anything from all what Nantus gave to you guys earlier. Okay, that's good. Give me a minute, please. Okay, welcome to the boot camp. Let's go down the rabbit hole. Please, can we all see the screen, please? No one is responding. Can we see the screen? Okay.
Yes.
Well, basically, Coach has already given you guys a bit of what you're actually here to do. And okay, background sound. Okay, let me switch that. Sorry. Okay. I hope it's off now. Oh, sorry about that. I'm actually in the office and I have colleagues here, so please just bear with me. Okay, moving on, moving on. Welcome to the bootcamp. Let's go down the rabbit hole. Well, now since I've given you guys the introduction, what is Forex, what is traded in the Forex market, I have told you about the major pairs, the cross pairs, the exotic pairs. That's basically everything you need to explain to anyone that is, let me say, asking you or anyone that needs information about Forex. I have given you everything you need to know as an introduction. So moving on, this is what we'll be treating today. These are the following topics we'll be taking. I will be taking you on what is a pip, because I know most of you might have heard the word pip. I'll teach you how to count pips and points, what a lot size is. This lot size has been the downfall of a lot of traders based on the fact that they don't actually know how to calculate it. And then I'll be closing with the types of Forex analysis that we have. Okay, so let's go. Okay, pip simply means points in percentage. It is the unit of measure that we use to express the change in price value between two currencies. Well, I just try to outline the definition as simply as I can for us to get a better understanding. It says it is the unit of measure used to express the change in price value between two currencies. And I give an example of two currencies. We have Euro USD, we have GBP NZD. So PIP is basically the change in price about the higher number minus the lower number. So that's how we also calculate range in a Forex market that's on a Forex chart. And mind you, anytime the market moves a pip, you're either making money or losing money. It all depends on how you enter the trade and how you actually prepared, or let me say your markups for that particular trade. Okay, moving on. I know you all have been waiting to see what the Forex chart looks like, or some of you might have seen it, but might not understand. So here's a sneak peek. How to count pips and points. And basically, like I said earlier, I said calculation of pips is based on range. And from the diagram I have here, you can see up here, we have the price. And if you trace it to your right-hand side, this is the price here. By this part of the chart, that's where you have your price listed. So for this particular price, we have 1.31800 as our top range. Then our bottom range, or let me say bottom price, is 1.29900. The breakdown of the PIP essentially is everything you have here. The first, let me say, the first three values, which is the main value, and then the remaining two values after the decimal. Those are your base currency. Base currency in the sense that this particular pair that we are dealing with is the British pound / the US dollar. That's the GU, which is GBP USD. This is the base price. And this, that's the current exchange rate for this last particular currency pair we are dealing with. When you're dealing with GBP USD, this is the current exchange rate for that particular pair. Then moving on, the remaining two values are called the pips, which is what we're actually focusing on this particular slide. Then the last part is the pipette. The pipette is based, let me say, essentially, most people don't really focus on it because it doesn't really have much of an impact when you're doing your calculations. So the main thing we are focusing on is your base currency and your pips. So over here, we have the pip count. Starting from, this is just an example to show you how how we actually count pips in the Forex market. We have 1.3110. Just imagine this is the bottom range we're given, and 1.3115 is the top range you were given. So when the market is moving up, as you can see here, we have this long blue candle. The red candle means we are having that a sell is taking place in the market, which means the market is coming downward. It's also called a short. That's when you're shorting the trade. And the long blue candles you can see here are buy candles. That's when the market is actually buying and is going upward. They are called when you're taking a long trade. That's when you see the blue candle. So, and this particular market is moving upwards, which means we are in a bullish market. So from here we have 1.3110, which is your base. Then as the market keeps moving up, it moves up a pip. It is as the next pip. If you notice over here, you can see that based on this 1.3110 over here, the market is moving up pip by pip. Let me say one pip after the other. From 1.3110, the next one is 1.311, which means it has moved up one pip. And it is also the same as in reverse. If the market is coming down, it is in a sell trade, like we have up here. If the market is in a sell trade, then the pip is going to be subtracted, or let me say it's going to reduce. We have 1.3115 up here. And if you from this value, if you subtract 1, we have 1.3114. So this is essentially your pip count. Moving up, the value in your pip increases, then coming downward, which is when you're taking a sell, the pip reduces. Then over here, for you to know the actual pip for any trade you're taking. And don't worry, we'll still go to a live chat, so I will show you how to use the ruler to get the pip, because I know writing it down and trying to calculate the pip might be tedious for some of us. And if you're taking a trade on a 1 minute chart, definitely you don't have all the time in the world to start calculating pips. So essentially for here we have 3.180, which is your top range. That's the top price here. Then the bottom price is 2.990. That's the numbers after the decimal are what we are using. So if you subtract the bottom range from the top range, we have 190 pips. So the distance between this price range from the bottom price range to the top price range is 190 pips. And based on the lot size you're using, it's either that's 190 pips is either a lot or it's either a little based on your lot size. So you can actually make a lot from this particular amount of pips, or actually make a little from this amount of pips. Like I said, it all depends on your lot size. Oh, you said you can't hear me. Wow. Why have I been talking to myself already? Please, if you know you can hear me, drop ones in the chat, please. Okay, some of us can hear. Then those of us who can, probably you guys should check your network, please. Please, guys, check your network if you can't hear me. Okay, I'll try and speak louder then. Moving on. Okay, that's good. I'm moving on now. We'll be moving to the next part, which is what is a lot size? Lot size. Like I said earlier, this has been the downfall of a lot of traders, and it has made traders, and it has also mad some traders. And from the definition here, we can see lot size is the total number of currency unit that is being exchanged during a trade in the Forex market. Like what Nancy said, exchange of currency. So lot size is what determines how much currency you are exchanging. Like from the definition, it says total number of currency units. Currency units means amount of currency that is being exchanged at a particular point in time. That is what your lot size is. Okay. This formula is basically just to help us get a better understanding of how we can calculate our lot sizes. So the simple formula is very straightforward, which is our lot size times the number of pips. For this lot size, when you're trading Forex, that's foreign exchange, I think the minimum lot size is 0.01, as you can see over here. That's the minimum lot size for trading Forex. We have other assets, like we have stocks, we have indices, we have the synthetic indices, and each of them we even have metals, which we have gold, silver, even US oil. So there are a lot of assets to be traded. Like Coach said earlier, we are traders, we're not just Forex traders. So we trade anything and everything. As long as there's a chart for it, we are up for the challenge. So the minimum lot size for every currency pair is 0.01. And from here, it says the lot size times the number of pips. That's going to give you how much you're actually gaining or how much you're actually losing to the market. And using the same price range, we have three types of, let me see, or three ways in which lot sizes are determined. We have the micro lot sizes, we have the mini lot sizes, and we have the standard lot sizes. This one in particular that has lot here, it's actually called standard lot size. As when somebody tells you you're using 8 standard, it means you're using 8 standard lot size, and that's like, it's the big sharks that actually use those kind of lot sizes. You can actually open a, let me say, $100 account and expect to be using a standard lot size. The leverage and possibly the margin is not going to allow you. So for, let me say, baby traders, they make use of the micro. Then average traders, or let's say intermediate traders, use mini lot sizes, and the experts, which are your smart money and the big sharks in the markets and your banks also, they use standard lot sizes. Okay, for the micro lot size, it says you have a 1,000 unit of currency that's what is being traded in the micro lot size. So we have 0.01. That's like the minimum lot size, like I told you earlier, for the currency pairs in the Forex market, which means this 0.0, that's for every pip that the market moves. That's for, how will I explain this for you to understand? Okay. Okay, now let me use this part. It says on a 190 pip trade, that's the trade from the bottom of the margin to the top of this, the bottom of the range to the top of this range, which is 190 pip for each. Give me a minute, please. Okay. The lot size times the number of pips. Well, basically, there's not much, actually, there's not much calculations to be done on the lot sizes. But if you just go with the formula, it makes it easier. Just calculate your pip, then based on the kind of account you are, let me say, holding, or the account you are trading with, that's what is going to actually determine the lot, which of the lot sizes you are going to use. I think those who trade heavy accounts, like I think from $1,000 upwards, they are, let me say, they are allowed to use mini lot sizes. Then let me say from probably 10,000 or 100,000 upwards are the ones that can actually handle the standard lot size. So, but if your equity is below $1,000, then it's advisable to use the micro lot size. So from the top of the range to the bottom of the range, we have 190 pips. So we already have our lot size, which is 0.01, and the number of pips, which is 190. So if we multiply 0.01 times 190 is going to give us the total amount we're actually making or losing in the market. So this 0.01, which is the micro lot size, the smallest lot size, times 190 pips. That's what gives, this is the amount you'll be making when you use the micro lot size on a 190 pip trade. This is what you get. Okay, want to screenshot? Don't worry. I think we'll discuss with coach. Probably you guys should be able to get the slides, or since it's a screenshot, I'll get back to it. Let me just because of time. A lot size, which is a 0.10. Because for this micro lot size, for every movement or every pip that the market moves, it is that every move, or let me say move per pip is 10 cents. That is what each pip costs for the micro lot size. Then for the mini lot size, each move the market makes, or each pip in which the market moves, its price here we have 0.10 multiplied by the amount of pips that we have. That's how we got $190. So if the trade is in your favor, you are making $190. But if the trade is against you, you are losing $190. So that's why it's good to always make sure your markup is intact. Follow all the necessary checklists you are given and just let the market do its thing. Then for the standard lot size, which the big sharks use, for each pip the market moves, you are losing $10 or you are gaining $10. So if the market moves from 1.31, let me say 1.299 to 1.3000, that is a $10 move. So you won't want to make any mistake with such an account. Okay, please, can you drop ones or twos in the chat if you are actually getting anything from all this, if you are with me? I don't know if a lot of us are still here. Okay, thank you. Okay, moving on. This will be the last part of my presentation for today, or let me say the last topic I'll be handling with you guys for today. We have the types of Forex analysis, and there are three basic types. Not even basic, these are the only three types we have. We have the fundamental analysis, the technical analysis, and the sentimental analysis. Okay, so let's move on. Let's jump right to the first one. For fundamental analysis, well, I just try to put the definition in the easiest possible way so you'll be able to grab what I mean from the definition. Fundamental analysis is determined by economic news and world events happening on a global scale. So most of that, I don't know if you guys noticed during the time of Trump, during the Trump regime, that was when the Forex market actually moved a lot, because that guy is let me say, how I put it, he's all about the money. So whenever he tweets, he's making money. He's moving the Forex market. Those are the kind of people that when you know there is a news coming out at a particular time, just do your markup and wait for the market to do its thing. Because fundamental analysis, if your markup goes the right way, then most definitely you are making money from whatever news that is being released. As long as it is a major news, you're going to make money from it. So fundamental analysis is determined by economic news and world events happening on a global scale. And this is the most widely used website for fundamental analysis is Forex Factory. This is the logo here. If you click on the link, you actually have access to the website. This is the widely used website for fundamental analysis. And this is what the platform actually looks like. This is Forex Factory. Here you have the dates. And I don't know if you notice, we have three different colors of folders. We have the yellow folder, which means the impact of that particular news is not much. This is the time over here, the time the news is going to be released. And these are the countries, or let me say the pairs that are going to be affected by that particular news. For this one, we have a news coming out by 2 a.m. on the 6th of May this year. The news came out by 2 a.m. It was a news that's a European news, and you can see the impact wasn't really much because it's a yellow folder. But and we we also have the orange folder, and I don't know, based on the way colors are, and if you know a little about temperature, yellow means it's not actually hot, orange means it's getting warm, then red means that's where the thing is, that's where, let me say, the event is actually happening, that's where everything is going down. Here we have the orange folder. We have media news. It's at a minimum, or let me say minimum, it's at a medium impact. Then for these red folders, these are the ones you should watch out for. You see these guys over here. They are the main cocoa. That's news came out by 8:30 a.m. on the same day. And for the Canadian, it was a little for the US dollar, the impact for the unemployment rate. This one we call it NFP week, non-farm payroll. So this is the impact of that particular news, 3.6%. And if I'm to show you this on a chart, sorry, I'm going to skip ahead in my slide, but okay, no, sorry, I'll need to show you that on a live chat. Sorry. So back to this. I'll show you the impact of this particular news on a live chat. But this is what Forex Factory website, this is what the platform actually looks like. Okay, moving on. The technical analysis. Technical analysis is determined by a combination of things. That is not just one thing that determines technical analysis. There are a lot, depending on method you're trading with. You have different, let me say, different approaches to the Forex market or to the Forex chart. So there are some people like we in RBTM, we make use of the SMC, which is a smart money concept. We have ICT traders. We have the ICT, they are called inner circle traders. We have support and resistance traders. We have those that actually trade, price action. So there are different, we have different methods, or let me say different approach to the technical analysis. So here it says technical analysis is determined by a combination of things such as support, resistance, trend lines, harmonics, candlestick patterns, Fibonacci. All these things listed here are things you are going to experience. These are things that you're going to come across during the bootcamp. So I'm just going to skip all these parts. Just blur out that part for now. When you get there, you're going to actually know what all those things are. And all these things are the combination of all these things that's bringing them together in your technical analysis is what you use to determine the movement of the market. Okay, moving on. Okay, this is, let me say, this is not an actual, let me say, this is not a full example of what the technical analysis is, but it actually gives you an idea. And I know in the previous slide, we had resistance listed, we had support as one of the things in the combinations that we're talking about. This line above here is called resistance, and this line below is called support. And over here, we have your trend lines. This is a trend line. This is a trend line. With all this and a combination of some other things, if for those making use of the harmonics pattern now, well, I'm not really free. I don't really know much about harmonics, but from the little I've seen, I don't know if this is an harmonic pattern forming here for a bullish move or something. But that particular thing you guys see on the chart that looks like a butterfly, that is what we call a harmonics pattern. I think you will see more of that during the course of the bootcamp. So, but please just manage this example. This is a resistance. This is a support. And for SMC traders, this is basically a range. So we deal with what is in between the support and the resistance. We deal with what is within the range. And for the last part of the sentimental analysis, for the types of analysis, we have the sentimental analysis. Okay, for this sentimental analysis, it says it is developed over time through intuition. from the word sentiment, you should get a basic understanding of what sentimental analysis is. It is learning how to read the price action and understanding how price is feeling. So based on, let me say, intuition, based on experience, things you've encountered in during your course of trading in the market, sentimental analysis is, let me say, a combination of all that experience, putting it to determine the move the market is going to make. And it also helps you, as part of sentimental analysis is knowing how to read Forex candlesticks. That's a whole candlestick, knowing what the length of the candlestick means. These are the wicks, knowing what the wick on the candlestick depicts. Okay, for instance, now, based on sentimental analysis, we can see long wicks over here, and we can see short wicks over here. This is like a tug of war between buyers and sellers in the market. The long wicks means, this long wicks down here means the sellers were actually gaining, but the buyers were here opposing. That's why we have long wicks here. For this particular candle, it started forming at this particular point. Then at some point, it sold up and it came down. Then the buyers in the market pushed up before forming a new candle. And from what we have up here, this is 60-minute chart, which means it's a 1-hour chart. So each candlestick here depicts the whole trading volume of an hour. So from the long wicks over here, you can see that the buyers are actually going against the sellers, and the sellers are actually losing strength based on all the short wicks depicted here. Then eventually, the buyers succeeded in moving the market to the upside. I don't know if we actually got any of that. Can I drop? Can I get some tools in the chat, please, if you understood what I was presenting? Okay. Thank you very much. Moving to a live chat now. Let me share my screen. Okay. Please, let me know if you can see the screen, please. Okay. You said you don't understand. Please, any question you have, please kindly drop them in the group. We'll attend to everything tonight before, let me say, before the close of the video. So please, any questions you have, please kindly drop it in the group, please. Thank you. So this is a Forex, let me say, this is a trading view app. This is a GBP USD. This is the 1-hour chart. And yep, this is the top range. This is the bottom range. That's based on how you calculate pips. I told you earlier I was going to show you how to get your pips instead of using the values on the left-hand side. Instead of using the prices, we have a tool here called the ruler. So it's called measure. Once you click on it, you fix it on your bottom range, and you take it all the way up to wherever it is you want to calculate.
Okay. All right.
Of the people to stop. And from what you can see here, you can see. Sorry, please, whose mic is on? Kindly mute your mic, please. Thank you. And we have 273.5 pips. That's from this price range up to this price range. We have 273.5 pips. So that's basically the job of the ruler, just to measure pips. And it doesn't just work horizontally, it also works vertically as well. So it goes both ways. If you want to measure it in terms of days and candlesticks, you can also go sideways too. Then for that particular news that I said I was going to show you about, this is the Euro USD pair. This is the 15-minute chart. That particular news took place on the 6th of May. So please bear with me while I'm still moving this Sixth of May, where are down? Okay, it's 26th. Okay, 20th of May. Okay, the 6th of May at a particular time, I don't know if any of you guys noticed, but for that particular, for the US news, based on what we had on the slide. Okay, for this particular, that's 8:30 a.m. That was when this news actually took place, and it had a negative impact on the US dollar. And if it had a negative impact on the US dollar, then definitely let me say the pair which the US dollar is being paired with is going to gain more strength. So this particular candlestick started forming as from this particular candle started forming as from 8 o'clock. So this particular candle is 8:15. Then this black candle over here started forming at 8:30 when the news started. So based on the fact that it is a Euro USD pair, when the news is released, if it has a negative impact on the US dollar, and the US dollar is, let me say, it is the base currency, which means it is at, sorry, if the opposing currency is the base currency, which in this case, euro is the base currency, it means euro, when the market is buying, it means the euro has more strength. And when the market is selling, it means the US dollar is actually gaining strength. So in this, that's based on the, let me say, the impact of that particular news. Actually, the news had a negative impact on the US dollar, which means the euro is going to gain more strength. So that is why we have this bullish move from this particular candle over here all the way up to this place. That is the essential reason why we have that particular move. So that was due to the impact of the news. Okay. Well, I've taken up too much of our time, and well, that will be all for today. Well, thank you for paying attention. Thank you for your time, because we really took a lot of your time. Thank you so much.
All right. Thank you, brother. Thank you, Tokwe. Thank you so much for the value. Thank you. So basically covered speed, how to count, covered lot size. Please, can you make me the post back? Thank you. So that was all we covered. I'm pretty sure for people that are into Forex and all, it might interest you less because you already know all of these things. So it's good we start from the basic to the complex, like I said initially. Tokwe, please, can you make me the host? Don't worry, we are done. All right, thank you. We are done for tonight's call. Just want to round up and then we can all call it a day. So guys, thank you for joining today. We are grateful. I appreciate you all. Once the recording is ready, it's going to be dropped on the link will be dropped on the Telegram link, on the Telegram group. It's going to be uploaded to YouTube. So one other thing we'd like you guys to do for us is when you're going to download, please subscribe and try as much as possible to like the video so that you can get more attraction. All right. In case you have any question, just drop your question in the Telegram group chat. We are going to attend to every single question. Every single one of the questions is going to be attended to. Tomorrow promises to be awesome. So tomorrow we are going to be having market structure and how to use the trading view. Tomorrow, trust me, tomorrow is going to be awesome. So we are going to be doing how to use trading view, the difference between brokers, and all of this good stuff. And then we're going to really start getting a bit deeper tomorrow because we are going to start a market structure. Trust me, nobody wants to miss the class of market structure. Nobody wants to miss that very class. So uh, invite your friends, invite your loved ones, well, invite your enemies, right? So thank you guys for joining. Shout out to my coach, Tony Blair. Thank you so much, coach. I am grateful. We all are grateful. If not for Tony Blair, this wouldn't. In fact, my coach is on the call. Wow. Good evening, coach. Thank you, thank you, thank you for your impact. Thank you for your training. Thank you so much. So, guys, yeah. Tomorrow, 9 p.m., we are back at it. Zoom link is going to be dropped by 8:50. Psychology is going to run for 15 minutes, and then we are going to get on board. So have a good night rest. Cheers, and God bless.